Well, dear students, good morning to you all. Today our topic is accounts from incomplete records. It is also called as a single entry system. Well, dear students, in the previous chapters, we learned double entry system. Under double entry system, all the transactions recorded in the journal first. Then after, they are all posted into the ledger accounts. Then all the accounts are balanced. From these balances, a trial balance is prepared. Based on trial balance, final accounts are prepared. Understanding? Now, we are in single entry system, not double entry system. This is the double entry system. Generalizing, ledger posting, balancing, trial balance, final accounts. This system is called double entry system. But whenever we are not following the principles of double entry system, we are recording a part of transactions not incomplete, then we can say it is called incomplete records and also called as single entry system. Understanding? We are not following the principles of double entry system. Debit the receiver, credit the giver, debit what comes, credit what goes, debit all expenses, credit all incomes. That principles we are not following. Just the required information we are entering into our books. So we are not taking into the twofold aspects. That means debit aspect and credit aspect we are not taking into the books of accountancy. Just we are taking one particular aspect only. So whenever we are not following the principles of double entry system, we can say single entry system. Eric Louis Kohler defines in his book Dictionary to Accountants. He is actually from America. He is an American. He defined single entry system as a system of bookkeeping in which, as a rule, only recording of cash and personal accounts are maintained, and it is always incomplete double entry system varying based on circumstances, based on requirements. We will change the systems. So we will record only a particular type of transactions, that also in part only, not in two aspects. Then we can say it is called a single entry system. In the single entry system, first they will maintain a proper cash book. All the receipts and payments are recorded in the cash book. Then after, they will prepare some important personal accounts with whom we are having regular transactions. With whom we are having regular transactions. Personal accounts are maintained. Then we are always dependent on vouchers, receipts, invoices, and some other important documents which are all properly kept in the file. Understand? Vouchers, receipts, invoices, they are all kept in a file. Based on that only we are recording the transactions. Next, there is no uniform. What it means? Sometimes we are entering two aspects also. Suppose take an example. We received cash from Siddharth. Cash received from Siddharth. We will enter in the cash book and we will enter in the customer account also. That means debtor account also. Sometimes, suppose we paid rent. In the case of nominal accounts we are not maintaining. We paid rent. It is only recorded in cash book, not recorded again in the rent account. No nominal accounts are maintained in the single entry system. And it is suitable to small business units like as me. I am maintaining an academy in which I am taking classes for intermediate degree students. So, no need to maintain double entry system. Just will follow. It is single entry system. It is suitable only to small business units. At the end of the year, from incomplete records also, they are going to find out the profit or loss by comparing the year beginning capital with the year ending capital. Try to understand. Just we are comparing the capitals so as to understand the profit or loss. In the year beginning, I started with 1 lakh capital. At the end of the year, I have 1,20,000 with me. Automatically, we can say there is a profit of 20,000. Everybody can understand. Understanding or not? Once again, In the single entry system, we are maintaining only a cash book. Then we are maintaining some important personal accounts. And we are maintaining a file in which vouchers, receipts, important documents or invoices are all kept properly. It is generally suitable to the small business units, and at the end of the year they are also finding out profit or loss. How to find out the profit or loss? Just by comparing the year beginning capital with the year ending capital. Year beginning capital is called opening capital. At the end of the year capital is called closing capital. Sir, how much capital I have today? How to find? In the year beginning you started 1 lakh capital, you know. But at the end of the year, how much you have on 31st December or 31st March? We don't know how much capital we have. Why? Because we don't have a proper system of bookkeeping. All the accounts are not available. Only we have cash book and some important personal accounts we have. From these records also, we can find out capital at the end of the year by preparing a balance sheet. It is also called in single entry system statement of affairs. Statement of affairs as on 31st March 2020. Liabilities and assets are taken. Suppose I have what assets I have today. We have furniture, we have books and racks, we have customers, that means debtors, and we have cash balance as well as bank balance. Take all the assets on asset side, what we have today. For example, total assets are 1,50,000. Your total liabilities, you have to pay some rent outstanding or some other creditors. Suppose you have 30,000, then 1,50,000 assets are there and your liabilities are only 30,000. The difference, the balance is nothing but 1,20,000. That is nothing but year-ending capital. What it is called? Year-ending capital, closing capital. Well, dear students, once again, I started with a capital of 1 lakh on 1st April 2019. Today I have 1,20,000 on 31st March 2020. Capital is nothing but excess of assets over the liability. Excess of assets over the liability, that is equal capital. Assets minus liability, that is equal capital. Understanding? Whenever you want to give a definition or explanation to capital, capital is nothing but excess of assets over the liabilities. Assets minus outside liabilities. What I have to pay to outside assets. Assets minus liability is equal capital. It is also called as net assets. It is also called as net assets. Once again, my dear students, in the year beginning, I started on that day, 1st April 2019, with a capital of 1 lakh. At the end of the year, on 31st March 2020, right now, today my capital is 1,20,000. So easily you can say there is a profit of 20,000 by comparing the year beginning capital and year ending capital. Year beginning capital 1 lakh is called opening capital. And year ending capital 1,20,000 is called closing capital. So closing capital minus opening capital, that is equal net profit during the year. So as to know this net profit 20,000, no need to prepare books of accountancy under the double entry system. Understanding? That's why almost all small business units, they are all following single entry system. Single entry system is nothing but incomplete double entry system. When you are not maintaining proper double entry, automatically you can say it is a single entry system. Understanding or not? Once again, last and final, single entry system is nothing but incomplete books of records. Incomplete records. Under the single entry, just we are maintaining a proper cash book. We are maintaining some important personal accounts with whom we have regular transactions. And we are keeping all the vouchers or receipts in a proper file. At the end of the year, we are going to find out the profit by comparing the capitals, year beginning capital and year ending capital. How much capital is increased at the end of the year? That is nothing but profit during the year. That's why here we are comparing the only capitals, that is called capital is nothing but net assets. That's why this method is called net assets method. What it is called? Net assets method. And it is also called statement of affairs method. Under the net assets method or statement of affairs method, we are finding out the profit by comparing the capitals. So closing capital minus opening capital, that is equal net profit. Well, dear students, understand. Just I will prepare here. I will give you format how to find out the net profit, and we'll go through further steps. Please take down. Well, dear students, in single entry system, there are two methods. One is called statement of affairs method or net assets method, and it is also called as capital comparison method. What it is capital comparison? Just we are comparing the year beginning capital with the year ending capital. That's why it is called capital comparison method, net assets method. Why it is called net assets method? Assets minus liability, that is equal capital. Assets minus liability, that is equal capital. That's why it is called net assets. And why it is called as statement of affairs method? We are finding out capital by preparing statement of affairs. By preparing statement of affairs. So, the first method is called net assets method, statement of affairs method, or capital comparison method. Under this method, we are preparing statement of profit or loss, statement of profit or loss for the year ended March 2020. It is a simple format. Well, closing capital, year ending capital. How much we got previously? 1,20,000 just. 1,20,000. Closing capital or you can say capital at the end. $1,20,000. Right now our capital is 1,20,000. That we got by preparing statement of affairs. Total of assets minus total of liabilities as on today. 1,20,000 we have. Year ending capital, closing capital, or you can say capital at the end of the year. Add drawings during the year. Drawings during the year. Suppose the owner, the proprietor, withdrawn every month 2,500 rupees. In every month, he has withdrawn 2,500 rupees for every month, for his family domestic purpose, for his personal use, which is called in the name of drawings. For 12 months, he has withdrawn 30,000 rupees. Well, dear students, today I have 1,20,000. If 30,000 rupees not withdrawn, automatically I have right now 1,50,000. Understanding or not? If I never withdrawn 30,000, now in the form there will be 1,50,000. That's why we are adding 1,20,000 right now what we have, plus how much we already withdrawn, 30,000. Both are added. We have 1,50,000 less further capital. It is also called additional capital introduced by the proprietor. Suppose he introduced 25,000. So 1,25,000 now minus opening capital. Opening capital. It is also called capital at the beginning of the year. Now final profit for the year, net profit for the year, 25,000. Once again, last and final, my dear students, it is a simple format. Under the first method, what it is called? Statement of affairs method, net assets method, or capital comparison method, under which just we are preparing a statement of profit or loss at the end of the year, or for the year ended on 31st March 2020. Today, how much I have capital? 1,20,000. That is called closing capital. How I got that 1,20,000? By preparing a statement of affairs, total of assets minus total of liabilities. That is called capital as on today. Capital as on today, 1,20,000 rupees. During the year, the owner has withdrawn certain amount for his family purpose, domestic purpose, for his personal use. That amount, suppose I paid examination fees to my son in the college from the money taken from the business. Automatically it is called drawings. It is also called drawings. Whatever the money used by the proprietor from the firm for his personal purposes, they are all called drawings. Total drawings are added. Why I added? That also I told. Why? Today I have 1,20,000. If the 30,000 not withdrawn, automatically there will be 1,50,000 rupees. So we add it to get 1,50,000. Minus, we are deducting additional capital whatever introduced during the year, further capital introduced by the owner, and also year beginning capital. Additional capital and opening capital both are deducted. So two are added. What two are added? Closing capital add drawings. Minus opening capital, minus additional capital, both are deducted. Understand? Closing capital add drawings minus further capital or additional capital, you got 1,25,000. For this sum are using the word adjusted capital. What it is called? Adjusted capital. Minus opening capital, that is called final net profit for the year. Okay? Once again, closing capital plus drawings minus additional capital minus opening capital, that is equal net profit. So it is the easy way of finding out net profit or loss. It is suitable to small business units. I already told. No need to prepare books of accountancy under WNT system, in which you have to maintain journal, ledger, preparing balancing of accounts and then trial balance and then final accounts. That system is too lengthy system that is not so suitable to small units. That's why they are following this method only. This is called first method and also called statement of affairs method and also called net assets method, capital comparison method. Understanding? Please take down. Well, dear students, here we told there are two methods of singularity system. One is net assets method, statement of affairs method, that only we learned right now. This is only required for inter-level students or for 11th or 12th standard students according to central syllabus. This conversion method is only required for degree level or more than degree level for CA, CMA foundation courses or for IPCC, etc. But now, what we learned in net method, that only called single entry system actually. Under the single entry system, we are finding out profit or loss by preparing a statement of profit or loss, closing capital at drawings, minus additional capital, minus opening capital. That is only single entry system. We are finding out the profit or loss at the end of the year. It is the easy to follow, easy to apply, simple system, and less expensive also. Everybody easily understand the method of single entry. But we are going to now learn the difference between the single entry system and double entry system. Double entry system is a complete record of transactions is there. Complete record of transactions, and also called it is a scientific system and systematical system. But here in the single entry system, it is an incomplete system and it is not a scientific system. Understanding? Here complete record of transactions are there. Here incomplete record of transactions. Here two aspects are taken into account. Two aspects of every transaction are taken into account. But here generally one aspect only taken, sometimes only we will take two aspects. Here all accounts are maintained, all accounts, personal accounts, real accounts and nominal accounts all are maintained here, but here only cash book and important personal accounts are only maintained. In the double entry system, at the end of the year we can prepare a trial balance through which we can understand the arithmetical accuracy of the books of accountancy. The accuracy of books of accountancy can be understood. But here it is not possible because there is no complete record of transactions. We can't get trial balance at the end of the year. Next, under the double entry system, we are finding out profit or loss by preparing trading profit and loss account. Trading profit and loss account. But here we are finding out profit only by preparing statement of profit or loss. It is suitable to all business units. It is suitable to all business units. Whether it is a small or big, whether it is a company form of organization, banks, cooperative societies, and insurance companies, any firm can prepare books of accountancy under the double entry system. But single entry system is suitable only to small business units. Small business units. Understanding or not? Once again, it is a complete record of transactions, but it is incomplete record of transactions. Here two aspects are taken into account, debit and credit, or coming and going, or receiving and giving. Both the aspects are taken into account here. Here only one aspect is taken generally, but sometimes maybe two aspects. Here all accounts are maintained like personal accounts, real accounts and nominal accounts. But here we are maintaining only cash book and important personal accounts. Here through double entry system we can go through arithmetical accuracy of the books of accountancy. That means whether we prepared journal, ledger, balances, everything, whether we did correct or not, we can understand through trial balance. But here no trial balance, we cannot find accuracy of books of accountancy. Next, under the double entry system we are finding out profit or loss by preparing trading profit and loss account. Through trading account you can find out gross profit. Through P&L account you can find out net profit. But here by preparing a statement just you are finding out net profit. Not only that, here you can find out the accurate exact net profit, but you can find out nearest net profit only, not exactly correct. Next, It is suitable, the WNT system is suitable to any organization, any business unit, whether it is a trading concern or a manufacturing concern, whether it is a sole trader or partnership or a company, for any firm, it is suitable. But it is suitable only to small business units like sole trading firms. Next. It is legally allowed. As per our Indian Companies Act, all the companies must maintain the books of accountancy under the WNT system only. It is legally allowed. But it is not allowed as per law. As per law, it is not allowed. Next and last, under the WNT system, whatever you are preparing the financial statements at the end of the year, trading, profit and loss account and balance sheet, they are all helpful for further analysis, financial statements analysis, and it is helpful to even to income tax authorities, banking authorities when they are going through sanctioning a loan. This WNT system records are helpful to them. But singularity system is not helpful to any further analysis and to other organizations like income tax, banks and etc. Understanding? It is helpful to banks, IT department or sales tax department. For anybody, the books of accountancy under WNT, they are helpful and suitable to them to assess the income tax or for sales tax or for any other further analysis like that. But it is not helpful. Understand? These are all the differences under the WNT system, between the WNT system and the singularity system. And you can write down these are the drawbacks or limitations of singularity system. These are nothing but the drawbacks or limitations of singularity system. It is not suitable to all the business units. There is no scientific system. It is incomplete books of records. Next, we can't find out gross profit and net profit separately. And we cannot prepare trial balance. We cannot understand the mathematical accuracy of the books of accounts. Understanding or not? These are all the limitations, and these are the differences between the WNT system and the singularity system. Now, what is the difference between the balance sheet and the statement of affairs? Well, dear students, generally the term balance sheet is used in the WNT system, but it is used in the singularity system. Balance sheet is the financial statement, last statement prepared under WNT system. After trading, profit and loss account, balance sheet is prepared. But statement of affairs is generally prepared under the singularity system. Next, under the WNT system, the balance sheet we are preparing, and we are taking the all assets and liabilities from the book values as per our, according to our ledger accounts. Book values are taken. When you are preparing WNT system, when you are preparing balance sheet, all the balances, building, furniture, machinery, cash balance, bank balance, all the balances we are carry forwarding are taking from the trial balance. From the ledger account balances we are taking. But here, all the assets and liabilities are taken at estimated values. Through physical verification, we are going to find how much furniture we have, how much customers' debtors we have, and how much the bank balance and cash balance. They are the real facts, correct only, because we prepared already cash book. Already we prepared cash book. That's why cash balance and bank balance, they are the correct figures only. But all other figures are all estimated values. Next, the main objective of preparing balance sheet is to find out financial position of the firm. Financial position of the firm, to ascertain, to find out financial position, balance sheet is prepared. But the statement of affairs is prepared only to find capital at the end of the year. Capital at the end of the year. Through balance sheet, we can find out the true and real financial position, but here we cannot find. Real financial position cannot be found through statement of affairs. Understanding or not? Once again, balance sheet generally the term is used in double entry system. Statement of affairs is used in the single entry system. Here we are taking all the book values according to our ledger account balances we are taking. Here estimated values are taken. The main objective of the balance sheet is to know the financial position. But here it is prepared to find out the capital. Next, and through balance sheet, we can find out the real financial position, and through statement of affairs, we can also find out the real financial position. Nearest financial position or estimated financial position, only we can understand. Last and final, by preparing balance sheet, when you prepared balance sheet, the total of assets must be equal to the total of liabilities. Then you can understand all the journal, ledger, trial balance, trading, profit and loss account, all are prepared correctly and exactly. So, whenever balance sheet tally, you can understand the accuracy of books of accountancy. But through statement of affairs, we can't find accuracy. Why? Because only by comparing the assets and liabilities, total of assets minus total of liabilities, we are estimating how much capital we have on that day. We don't know how much capital exactly. We are estimating the capital at the end of the year. So accuracy of books correct, not understand through single entry system or statement of affairs. Understanding or not? Once again, my dear students, please go through. This is the theoretical part. But as far as the problematic part, only we are preparing at the end of the year statement of profit or loss to ascertain the profit or loss. To ascertain profit or loss, we are preparing statement of profit or loss. Closing capital at drawings minus additional capital and minus opening capital. That is the simple format to ascertain the profit or loss under the single entry system. That only the first method, that only called net assets method, that also called statement of affairs method, and also called capital comparison method. Understanding? Conversion method, it is a separate system through which we are converting the single entry system information or incomplete information into double entry. We'll go through in the next class. Okay?